I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into Wallstreetbets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk, and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet, whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell. I think that what it proves is this retail phenomenon is here to stay. There are 2.7 million people inside of Wallstreetbets. I think that they are as important as any hedge fund or collection of hedge funds. And I think the most important thing is that in a world of zero interest rates and quantitative easing, I don't know how you can run a typical hedge fund strategy and make money anymore. Because, for example, when you looked at GameStop, a normal person would say, how can you have 136% short interest? How can you be short 40% more shares than actually exist in the world? To a normal person, that doesn't make any sense. But to a Wall Street mathematician, that's the game that has been played for years. And that game came undone.
Well, that may be somewhat of an extreme example. Let me just go through a couple of things you said here. I have a hard time believing. You suggested that there's, a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things. There's a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along.
We're showing you images right now of Barstool's founder and day trader Dave Portnoy, because he was blasting Robinhood online all day yesterday, and he alleged that perhaps Citadel pressured Robinhood to partially restrict trading in GameStop and other stocks. And I asked Vlad Tenev to respond to that accusation.
Completely false. Yeah, that's complete misinformation. That did not happen. Hopefully I'm being clear about that. Nobody pressured us. We didn't do this at the direction of a market maker that we route our orders to or any other financial market participant.
They become very formal. I did not do that. Whereas they would have said in the past, I didn't do that. Distancing language, the classic one is, I did not have sex with that woman.
But I want to say one thing to the American people. I want you to listen to me. I'm going to say this again. I did not have sexual relations with that woman.
Completely false. Yeah, that's complete misinformation. That did not happen. Hopefully I'm being clear about that. Nobody pressured us. We didn't do this at the direction of a market maker that we route our orders to or any other financial market participant. No, this was an internal operational and risk management decision that the firm made so that we could protect the firm and protect our customers.
Do you believe, though, that Citadel knew that you were going to have to take these steps and effectively ran in front of it?
I can't really comment on. I don't think so. That seems another one of those misinformation and conspiracy theories. Certainly, we made decisions based on the financial requirements, including SEC net capital obligations and clearinghouse deposits that brokers have to comply with. And Robinhood was not the only broker that restricted buying of these securities.
Right.
This has been unprecedented activity concentrated in a few names. And it's really the first time that I've seen where social media and financial services have intersected in this way.
Have you gotten calls from the SEC?
I probably can't comment on specific conversations that we have had or are having, but our team is in constant communication with our regulators and agencies, and working very, very hard to reopen trading to reopen buying in some of these securities as soon as we possibly can.
I want you to address the obvious. This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy. Fair criticism.
That's not what it is at all. And I know you started this segment. It really resonated with me because you described the story of Robinhood. Robinhood started 5 years ago by pioneering commission-free, no-account minimum mobile investing. And we've been the spokesperson of the individual investor. And our whole goal as an institution is to enable those customers, empower them, and give them access to the markets. Because for the longest time, markets have been only accessible to the wealthy. And so the entire industry adopted our business model in 2019. And in 2020, we added millions of new customers. The entire industry added millions of new customers who took advantage of the market rally and became investors for the very first time. So, we had to make a very difficult decision to protect our customers and our firm.
Why?
But we in no way
why? Explain why you had to do it if it wasn't to protect the guys who had shorted the stocks, which are the big hedge funds. How are you helping the little guy investors?
Well, I know that there's rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants.
So why'd you do it?
Decision. Robinhood, as a brokerage, has lots of financial requirements. SEC requirements. We have to put up money at clearinghouses. the amount of money that we have to put up depends on market volatility, and we're in a historic situation where there's a lot of activity and a lot of buying concentrated in a relatively small number of symbols that are going viral on social media. So we haven't really seen anything like this before. And to prudently manage the risk and the deposit requirements, we had to restrict buying in these 13 stocks. But customers that held them could sell throughout. Thousands of other securities and stocks on our platform were available to freely trade. And our number one priority, as you mentioned, is to make sure our platform is reliable, stable for our customers. We're serving our customers and giving them the tools.
But that's exactly what's in question now.
We're doing everything in our power to turn it back on as soon as prudent.
But that's the thing, is that the trust is in question, because it seems like the only people who are getting hurt were the big shots. And that if they were benefiting from this, your small investors now believe that you wouldn't have shut down the game. And just one thing without getting in the weeds here. You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements. And
the SEC hasn't said you had to do this.
Well, lots of brokers have to comply with these financial requirements and have issued restrictions on some of these names. And this is an industry-wide thing. You yourself mentioned that other brokers this week have imposed restrictions. And not speaking for other firms, but for Robinhood in particular, this isn't because there's deals happening with market makers we route to or market participants.
But then why did you allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you, and they had a big short position, and that looks like a stinky conflict that you didn't come out straight on from the start. Address that.
Well, none of that had anything to do with our decision to do this. Again, this was just looking at regulatory requirements, financial requirements, and we 100% will always protect our customers, where the entire business is operating to empower individual investors and has been since its founding. And that's what Robinhood is committed to continue to do. So we don't want to restrict buying in these 13 stocks. We're doing the best we can to re-enable it as long as it's operationally and prudent from a deposit standpoint.
All right, thank you guys for watching. I hope you learned something new today on investing. If you enjoyed the video, make sure to destroy the like button, and as usual, if I missed anything, drop it down in the comment section below. And if you're new here, please subscribe for more videos and real investing advice. Check out some of my other videos from my investing playlist where I talk about the most important topics and teach you what to do. So, until next time, stay the course and keep investing on a regular basis.